Hi, this is Jeff Lefkowitz from the Lefkowitz lending team at Northpointe Bank. I'm sitting here with my good friend, Eddie Blanco, the broker-owner of Stratwell Real Estate out of Miami Lakes, Florida. They do residential real estate. And Eddie, I wanted to get together and talk about Stratwell and what's going in the South Florida real estate market.
All right, sure. I started in real estate in 1998, a while back. And I got involved in residential real estate, door knocking, the old traditional ways of doing real estate. And then fast forward to like 2008, in the middle of that real estate recession, real estate crisis that we had, I started this company. And we've mostly at the time were focused in selling distressed real estate, foreclosures, and working in that space. Really, that's what business was available, and we were working that business. And then fast forward to like 2012, we got involved in selling institutional, buying properties with institutions. They were buying properties to hold for rent. And then back in like 2018, we started focusing more on the residential real estate. So those are the three components of the business that we focus on. We have an office here in Miami, we have an office in Naples, and we're a real small team, but we get a lot of business done.
So I'm really excited to hear that I'm sitting down with the incoming president of the Miami Realtors Association. Congratulations.
Thank you. It's an honor to be involved in the organization. The Miami Association of Realtors is the largest realtor association in the nation, and the realtors nationwide are the largest trade organization in the country. So the realtors have a lot of lobbying power, and it's really important, that we have 58,000 members in our organization. So my focus as the president of the Realtor Association is to how we can serve our members better, get them the education they need, increase the standards of professionalism and education, and grow the organization.
Eddie, we met probably 4 or 5 years ago. You were the listing agent and I had a buyer. Yep. And then one of your listings fell through, if I remember, and of course I was calling you often. Yep. And you gave me a shot to, of course, the Lefkowitz lending team got the deal done in timely fashion.
I remember that.
So Eddie, we're in an environment where it's very tough to get an offer accepted. Rates going up, inflation, discussion about recession. What are you seeing with all the listings you guys have? What are you seeing with buyers and the offers you're getting?
Yeah, what we're seeing is in many cases a multiple offer situation. Buyers frustrated with having made multiple offers on multiple properties, trying to get their offer above the others.
Yes.
And with that, I think that what makes offers stand out above other offers is when the buyer is, there are some agents out there in the listing saying, hey, we want to see a DU, and I don't know if you remember, we had talked about that, and I said, the best thing that a listing agent can do, and what we do, is we reach out to those lenders, those offers lenders, and many times we can't even get them on the phone and have a conversation about the borrower, or they don't know about their borrower. So that's a red flag for us. So a borrower needs to know that their lender is responsive when that time comes to answer the right questions, that they really understand the file and are prepared to answer those questions so that they can get their offer to stand out above others. And that's something that I don't think an average consumer understands and knows. So their agent is not as responsive as they need to be, and their lender is not as responsive as they need to be, and they might get their offer rejected, not knowing that the reason was that we weren't able to communicate with them, and they didn't get their offer to stand out above the others because of a lack of communication.
And we could have a whole discussion on why DU really doesn't
really matter. Yeah. So that's the thing. A lot of people don't realize that the DU, the desktop underwriting, is only as good as the lender that types in that information. So we want to know by asking the lender the right questions. Are they a W-2 or are they a 1099 kind of borrower? And sometimes I'll call a lender and say, hey, yeah, I'm calling on Joe and Mary Smith up to find out about their offer. And the lender says, who? And I said, Joe and Mary Smith, you wrote a pre-approval letter and sent a DU over, and they're not even clear about who the borrower is. So that's a red flag, right? For us representing the seller, that's concerning. So if their offer is in par with another agent's offer, where the lender is responsive and is able to answer some of those questions, that offer is going to get accepted, over the others. So that's important to know.
Interesting you say that. This week I got an offer accepted and the listing agent called me. But we had already done a full underwrite. We have a true approval at Northpointe,
right, where
my letter said that they were approved. This is not a pre-approval. We could close well within 30 days, and this couple had been through underwriting. It's quite different than a pre-approval in today's world.
Well, the key there is you answered the phone and were able to address that listing agent's concerns, and that is what I'm talking about. That's the value that you can provide that others may not be doing.
And she really liked that I told her that I would call her every Tuesday and give her a heads up of what's going on with the file.
And you will.
Yes.
That's awesome.
So Eddie, one thing that I wanted to talk to you about, because I get asked a lot, is this a good time to be a buyer of real estate? And I also get asked a lot, is the market changing? Do I have a better shot of getting my offer accepted? So tell me, do you see a softening of the market or anything with listings or?
Yeah, well, let me address the first thing. Is it's the right time to buy? And what I tell most consumers is that trying to time the market to whether or not you should be buying a home now or some future time is a mistake that a lot of buyers and sellers make. They're trying to make moves like I had clients that 3 years ago said, I think the market's at its top, I'm gonna sell. Well, they made a bad strategic decision because they were trying to sell because they thought the market was hot, not because they had a specific need to sell.
Yeah, where are they gonna go?
Right, and so that's a challenge. So what I always say to borrowers and buyers is, can you afford the payment? You're comfortable with the payment? If the answer is yes, that payment's probably at par or below what rent's gonna cost. You secure a fixed rate payment that you can afford, and you hang in there. Whether the market goes up a little, goes down a little, it doesn't matter. 5, 6, 7 years, all markets will correct. They have before. In 2009 was the worst of the market. By 2012, the market was back up. So it was a 3 or 4 year period that it was really, really bad, but then it came back up. And before you knew it, people that had thought they had lost equity were back up. And now those people, if they stayed there long enough, are back up again. So as long as you can afford the payment and you can withstand, the changes in the market, you just hold on and keep paying your rent, keep paying your mortgage. The alternative is, be subject to a landlord's increasing rent or a landlord kicking you out because they need to get someone else in there. You have stability when you buy a home. You have tax benefits when you buy a home. You get to do what you want when you have a home. So should you buy now? I would say if you can afford the payment and you have a stable life situation, yeah, you should buy.
It's something you said, because one of the first things I talk to every buyer, I said, have you given any thought to the ultimate payment you want? All in, taxes, insurance, HOA, because you don't want to be house poor.
Right.
And you want to be, a lot of realtors will talk about a $300,000 or a $500,000 purchase, but we're qualifying them on a payment.
That's correct.
And so that's very important.
Yeah, and as rates are increasing, those payments are increasing at the same borrow amount, but maybe the market adjusts a little bit, maybe they're able to get that, but still rates, we're spoiled with rates. We're thinking, 5%, 6% is high. That's not high relative to where rates have been over the last 30 years. So it's a fair rate, right? When I started in real estate, rates were at 9%. They went all the way down to 2.25%. Now they're back, on their way up, but I don't know where that's going to stop. So I say timing the market and trying to be buying your home, your primary residence, and trying to be buying it like if it's a stock or some type of investment, timing it is not a good idea. And you're probably going to be wrong. Most professionals are wrong about what's going to happen with the market one way or another. So it's not a good idea to be a homeowner trying to time the market.
I heard something very interesting recently. They said, marry the house, not the rate.
Okay, that's interesting.
Because you know what? Rates change.
Right.
We're already in a market with inflation. So the Fed is raising rates. And now there's already discussion that maybe there's a hard landing. And in that type of environment, you might have rates coming down.
Right.
But
yeah, to that point, what I say is don't wait to buy and wait. And that's the way to do it. Just buy and wait it out, rather than wait to buy. I think that's a mistake many people make.
And now as an investor, that would maybe be a different understanding. I mean, first of all, as an investor, the payment and what type of income you might be getting for that, for that investment, your return on equity would be much more important as opposed to someone who's buying as a long-term, for their family.
Yeah, so to the same point with that, when we're buying properties today, we're not looking at what the potential increase in equity might be, like how much the property value might increase. What we're looking at is, can we afford the payment with the rent income that we're getting and then get some cash flow? And if the cash flow is there and the rate of the return is there, then it doesn't matter what we're paying for the property or if it goes up or down, the cash flow is what we're looking for. So again, it's not a strategy of, that strategy of buying the right place, the right time, and getting lucky. I hear wonderful stories of people that bought in Wynwood and paid $800,000 for a property that's now worth $8 million. That's wonderful. That is speculation investment. That's not the type of investments that I do.
Now, do you feel there are a lot of different types of buyers in this market? Because I see, traditionally we would always see investors who want to buy a multifamily property to, cash flow. But today it seems that people buying things, renovating, creating opportunities with Airbnb or...
Sure. I mean, with inflation, the way it's at, we did a video on our YouTube channel about how to hedge against inflation by buying real estate with a fixed rate interest rate loan. And as inflation continues to increase, people are looking at ways to buy real estate and have an asset. Because if you have an asset and it is inflating in value, you're making money while the inflation is happening. You're hedging against your risk as opposed to having cash in the bank. And so, yeah, people are getting more and more creative about how to invest. There's, there's people that there's segmented ownerships that the people are doing. There's Airbnb. There's people buying properties, developing new construction, ground up rentals. There are big hedge funds that are buying single family homes for rentals. There's a plethora of buyer types out there, and there's a lot of excitement and ambition to acquire assets, and that's the nature of the environment that we're in.
And I'm finding a lot of investors, a lot of new investors that people I've done business with for years that all of a sudden in the last few years have become investors. And it's amazing what I see that they're buying properties right, doing some renovation and creating some income opportunities for themselves and creating, equity. Yeah. So there's a lot of good education for investors today that there might not have been years.
Because we've had such a strong increase in inflation and appreciation, people are able to make mistakes in real estate investing and still make money, not necessarily do it the right way and still make money. That time is maybe coming to an end. The market is kind of stabilizing and people need to be mindful of that as investors. So it's not always going to be going up at the rate it's going. I'm not saying that it's going to crash, but I am saying that it's not going to always increase at the rate it is. So people need to be mindful, especially people who are buying, speculating. I'm saying is don't buy speculating that, I'm buying at this price, but tomorrow it'll be worth more. Not necessarily, so don't bank on that. Bank on the cash flow. If the cash flow is good, then I'd buy. If it's not, then I wouldn't.
You know what they usually say when there are people telling stories in the streets about their wins in real estate? Certainly happens in the stock market.
Sure.
That's when it could be the top of the market, as you say.
Yeah.
And those people, hopefully, they're not over leveraged in today's environment with.
Yeah, that's true about gamblers too. Gamblers never talk about the losses; they only talk about the wins. So yeah, there's some wins and losses in real estate investment, like in any type of business model. So people need to be mindful of that. Understand that it's not as wonderful as somebody on YouTube trying to sell an investment program where everything's wonderful. It doesn't always happen that way. At least not based on my experience or the experience of the group of investors that I work with. There's wins and there's losses.
Yes. I want to thank Eddie Blanco from Stratwell Real Estate for sitting down with us today. I really appreciate it.
Yeah, it's my pleasure. Anytime, I'll be glad to sit down with you again and do this again. Thanks.
Till next time.